Hi students, welcome to my channel. A very good evening to all of you. And in today's session, we are going to discuss AS-12 government grants. Okay, and let's start the AS-12 and government grant. First of all, government grant means what? It is an assistance provided by the government to an entity in cash or in kind. So it is a one type of financial assistance provided by the government to an entity in terms of what either in cash or in kind, subjected to what fulfillment of the condition. The conditions may be fulfilled either in past or to be fulfilled in future. So any assistance, any financial assistance provided by the government to an entity, either in cash or kind, subjected to the fulfillment of conditions, either in past or in present, or will be in future, is said to be about government grant. But remember, under like for example, generally these type of financial assistance is provided either for development of the particular industry or for providing the employment in the particular area or for development of the corresponding area, etc. Sometimes the government may provide assistance other than by way of the government grant, like some tax holidays are declared in a particular area, or tax exemptions are provided, but those are not covered under AS-12. AS-12 clearly stated some items are not covered under AS-12. So, like assistance which are provided other than by way of the government grant, other than by way of government grant, like tax holidays and tax exemptions, etc. And second one, if the government participation in the ownership of an entity, government participation in the ownership of an entity. For example, if the government purchase the equity shares of an enterprise, so like public sector units, public undertaking units. So in that in case of PSUs, the major staking lies with the government, and based on that we can say so any assistance provided by the government is not treated as a government grant. And government providing anything by performing their duties. For example, as per the Indian Constitution, government required to provide some statutory duties. So either they need to provide infrastructure, they need to construct roads, railways, airports, etc., and need to provide education, and need to provide hospitality, etc. And these all are not treated as a government grant because they are performing as per their statutory duties. Okay. And so here, what is one by government grant we discussed, and what is the scope of the AS-12, and means applicability, non-applicability is discussed. And here, government grant is always subjected to some conditions, and the conditions may be fulfilled either in past or to be fulfilled in future. Okay, and coming to the next one, recognition of the government grant. So recognition of the government grant, and government grant can be recognized only if it satisfies two conditions. Only if it satisfies two conditions. One is enterprise will comply with conditions attaching to the grant. Enterprise will comply with conditions attaching to the grant, and the grant will be received. If these two conditions are satisfied, then we can recognize the government grant. Okay, and what are the accounting treatment? And based on the nature of the grant you received and for what purpose the grant is received, based on that we have to write the journal entry. And in AS-12, only two topics we have. And one is accounting treatment for receipt of the government grant and accounting treatment for refund of the government grant. These 2 points only. And what are the accounting policy we followed in that case? So, if the government grantor received towards the promoter's contribution, and towards your capital as a part of your investment or as a part of your capital. So, if any government grant received towards the promoter's contribution, that is treated as a capital profit and is transferred to capital reserve, and that is forming part of the shareholders' equity in terms of what capital reserve. So, we write the journal entry bank account debited to capital reserve account. And if any government grant received for development of the backward areas or for establishing the entity in a backward area or for establishment of the plant in a backward area, and those are also treated as a part of capital reserve only, and we wrote the entry bank account debited to capital reserve account. Okay, and second one, If the grant received in terms of the kind, the grant received in terms of the kind, and it means the grant received in terms of an asset. If the asset is provided either at free of cost, either at free of cost, or at some discounted price or at concessional price. And remember, if any kind received in the form of the grant at free of cost, at free of cost means nothing we require to pay to the government. So, what is the entry to be recorded? Shall we record the respected asset in our books of accounts? And the standard says, even though you are receiving the kind in the form of the grant at a free of cost, you required to record it at a nominal value. Recording at what? Nominal value. But there is no definition for nominal value, and nominal value will be vary from management to management, and they may consider either 1 rupee, 10 rupee, 100 rupee, etc., depending upon the case. In that case, so asset account is debited. We have to record it in the books of account. Asset account is debited, and there is no credit aspect, and the credit aspect we transfer to profit and loss account. And if it is received at a discounted price, so for example, the government is providing the land whose cost is around 1 crore, but it is providing at around 30 lakhs to the entity for establishing the entity there. Then they are paying something to the government. They are paying something to the government. So that's why at what price they are purchasing, we record the respected asset in the books of account. Asset account debited to what? Bank at a concessional rate or at a discounted price. Okay. And this is the second one. If the government grant received in kind. And third one, if the grant received for payment of the expenses. Grant received for meeting the payment of the operating expenses. And the grant received for payment of expenses in the current year only. In the current year. Then, so how to adjust it? In that case, it is required to be reduced it from the corresponding expense or credited to profit and loss account as other income. Credited to profit and loss account as other income. Then what is the entry? When the grant received, we write the entry bank account debited to grant received, and then grant received account debited to expense account or to other income account or to other income account. But if the grant received for meeting the expenses in future years, say for the next 5 years, for payment of the salary, grant received by the entity is 150 lakhs. Grant received by entity from the government 150 lakh for meeting the salary expenses over the next 5 years. In that case, how to treat it? When the grant received, consider it as a other income, deferred income. Then we write the entry bank account debited to deferred income account. And when the expenses paid in the corresponding year, then we write the entry expense account debited to cash or bank. Expense account debited to cash or bank. But out of the expense, some amount is paid out of the deferred income. Then we write the entry deferred income account debited to expense account or to other income account. Deferred income account debited to expense account or to other income account. Okay. When the grant received, that is treated as a deferred income. And then bank account debited to deferred income, we wrote the entry. And when the expenses paid, then we write the entry deferred income account debited to expense or to other income account. Okay. For example, so here Company X runs a charitable hospital. It incurs salary of the doctors, staff, etc. to the extent of 30 lakhs per annum. As a support, the local government grant a lump sum payment of 90 lakh to meet the salary expenses period of over next 5 years. Means what? 90 lakhs by 5. And per year we have to use what? 18 lakhs. And when the grant received, we write the journal entry bank account debited to deferred income. How much amount? 90 lakhs. And when the amount paid, say for example at the end of the first year, and they pay the salary, right? So salary account debited to bank 30 lakhs. And after that, deferred income is apportioned. Then we write the entry deferred income account debited to salary or to other income. to salary or to other income. How much amount we apportioned? 18 lakhs. So 18 lakhs. Okay, this is the one. In case of other income or in case of against deducted against salary, we reduce it from salary. Okay, next. So here, sixth problem. How would you treat the following in the accounts in accordance with AS-12? 35 lakh received from the local authority for providing the medical facilities to the employees. And these are the amount received towards providing the medical facilities to the employee. And it means what? So generally those are recorded as a staff welfare expenses. Staff welfare expenses. So the 35 lakh when the grant received, they write the entry what? Bank account debited to grant received. And when the amount is utilized, grant received account debited to staff welfare expenses or to other income. It is reduced from, it is shown as a, sorry, it is credited to the profit and loss account as a other income, or it is deducted from the corresponding expense, nothing but staff welfare or employee benefit expenses. Okay, and another one, 100 lakh received subsidy from the government for setting up a unit in notified backward area, and this is in the nature of promoter's contribution. So this amount is treated as capital reserve, and we write the entry bank account debited to capital reserve account. How much amount? 100 lakhs. Bank account debited to capital reserve account, 100 lakhs. Okay, and next. Okay, so this is the one. And next, so what we discussed, 3 points we discussed till now. And one is if the grant received towards promoter contribution, if the grant received in terms of kind, or a grant received for payment of expenses in current year or in future years. Okay, then coming to the next one, when the grant received for purchase of PPE, purchase of PPE. So here grant received in cash for purchase of property, plant and equipment. But the property, plant and equipment may be a depreciable asset or non-depreciable asset. Maybe a depreciable or non-depreciable. If it is a non-depreciable asset, if it is a non-depreciable asset, then we need to check any future obligations required to be satisfied. If any future obligations required to be satisfied. If yes, then grant received is treated as a deferred income, and we write the entry bank account debited to deferred income account, bank account debited to deferred income, and the deferred income is apportioned over the respected period in the proportionate of future obligations fulfilled by crediting to profit and loss account. So deferred income account debited to statement of profit and loss. So when the grant received for purchase of non-depreciable asset and said future obligations required to be satisfied, then when the grant received, we write the entry bank account debited to deferred income. And the deferred income is apportioned over the period in the proportionate of satisfaction of in the proportionate of satisfying the future obligation. Then deferred income account debited to statement of profit and loss. And if no future obligations required to be satisfied, no future obligations required to be satisfied, then we write the entry what? Bank account debited to capital reserve. That complete amount immediately transferred to what? Capital reserve. Next. And this is important. When the PPE, when the grant received for purchase of the PPE, which is a depreciable asset, which is a depreciable asset. In that case, remember two methods we have. Method one, grant received is reduced from cost or book value of the corresponding asset. Cost or book value. And we have to reduce it from the asset. Then asset is required to be decreased. So asset account is credited and the debit is given to the bank. So we write the entry bank account debited to asset account. The remaining value, say for example, purchase cost of the asset is 100 lakhs. We purchase the asset. Asset account debited to bank 100 lakhs. Grant received, so 40 lakhs. Then bank account debited to asset account 40 lakh. What is the remaining value of an asset? 100 minus 40. 60 lakh is there. That 60 lakh will be a portion over the remaining useful life of the asset in the form of depreciation. In the form of depreciation. That is the method one. In case of method 2, when the grant received is treated as a deferred income without disturbing the value of an asset, it is shown on liability side of the balance sheet. So bank account debited to deferred income. And the deferred government grant is required to be apportioned by crediting to profit and loss account in the proportionate of depreciation we charged on that asset over its life. Over its life, it is apportioned by transferred or by crediting to profit and loss account in the proportionate of depreciation. When the amount is apportioned, we write the entry deferred government grant account debited to profit and loss account. Deferred government grant account debited to profit and loss account. Okay. So, for example, here Jet Limited purchased fixed assets for 50 lakh, which has estimated useful life of 5 years with salvage value of 5 lakh. On purchase of the assets, government granted it a grant for 10 lakh. Pass the entries in the books of account for 2 years. So when the asset purchased, we write the entry what asset account debited to bank. And when the grant received, in the first scenario, first method is reduce it from value of the asset. Second one, deferred income. In the method one, when the grant received, we have to reduce it from the value of the asset. So we write the entry bank account debited to asset account. How much amount? 10 lakh. So out of the 50 lakhs, 10 lakh is reduced. What is the remaining value? 40 lakh. And so depreciation equal to. So therefore, no method was mentioned relating to depreciation, so we followed straight line method. So cost minus scrap value by useful life. What is the cost price? 40 lakh. Scrap value is 5 lakh. What is the useful life of the asset? 5 years. So 35 by 5, nothing but what? 7 lakh. So we write at the end of the first year, they write the entry what? Depreciation account debited to asset, profit and loss account debited to depreciation. Well, again for the second year ending, we write the entry depreciation account debited to asset, profit and loss account debited to depreciation, 7 lakh only because we are following straight line method. Next. And when it is treated as a deferred income. In case of deferred income, asset is shown here, so 50 lakh, and deferred income is shown on liability side as a 10 lakh. So asset account debited to bank 50 lakh, bank account debited to deferred income 10 lakh. Then for depreciation, 50 lakh minus 5 lakh by 5 years, nothing but what? 9 lakhs. Depreciation is 9 lakh. Depreciation account debited to asset account 9 lakh. Profit and loss account debited to depreciation 9 lakh. And this deferred government grant is required to be apportioned. Deferred government grant account debited to profit and loss account 10 lakh by in the proportionate of depreciation. Here we are following straight line method. So we have to apportion it equally. 10 lakh by 5 years, 2 lakhs. So deferred government grant account debited to profit and loss account is how much? 2 lakhs. Okay. And for second year also same entry we recorded. Okay. Next. Hmm. Coming to the second one, Mercer Limited has set up its business in designated backward area with an investment 200 lakh, and the company eligible to for 25% subsidy and had received for 50 lakh, and explain treatment of capital subsidy received from government. Here amount received towards the investment in backward area and is treated as a capital reserve. It is treated as a part of the shareholders fund or equity in the form of capital reserve. So we write the entry bank account debited to capital reserve account. Bank account debited to capital reserve. Next. Third one, Santosh Limited has received a grant of 8 crore from the government for setting up a factory in a backward area. On this, out of the grant, company distributed 2 crore as a dividend. Actually, grant is received towards the capital promoters contribution, but that amount cannot be used for distribution of dividend. Remember, any grant received for a specific purpose should be utilized for that purpose only. Instead of that, don't use it for distribution of dividend for adjustment against the losses for the current year or previous year, etc. So it cannot be distributed as a dividend. So it is violation about AS-12. And also, Santosh Limited received a landed free of cost from the state government, but it has not recorded it at all in the books. No money has been spent. Means here they receive the grant in terms of kind at free of cost. And the accountant feels that no amount spent for receiving the respected asset, so no need to write the entry. But standard says what? If the asset received in the form of the grant at free of cost, you need to write the corresponding as you need to record the corresponding asset at a nominal value. So we write the journal entry what? Asset account debited to profit and loss account. Say 10 rupees the nominal value. Understood? Okay. Next. Fourth one completed. Fifth one. So Top and Top Limited had set up its business in designated backward area, which entitles to company to receive the government grant government from the government of India 20% of cost of investment, for which no repayment was ordinarily expected. Moreover, there was no condition that the company should purchase any specific asset for the subsidy. Having fulfilled all the conditions under the scheme, company on its investment 50 crore in the capital asset received 10 crore from the government in the January 2000 X2, accounting period being 2000 X1 to X2. Company wants to treat the recipient as an item of revenue and therefore reduce the losses on profit and loss account for the year end 31st March. But already I told you, if any grant received for a specific purpose, it should be utilized only for specific purpose. Instead of don't use it for distribution of dividend, and nor it is treated as a deferred income, and it cannot be utilized for adjustment against the losses. Therefore, the accounting treatment done by the party is wrong, and here the amount received towards the promoter's contribution and is treated as a capital reserve. So bank account debited to capital reserve is the entry. Okay. Next. And okay, this is about the grant. So accounting treatment for grant. Okay. Next, coming to the second part, refund of the government grant. And means if the entity unable to fulfill the conditions attaching to the grant, then government may demand the amount back from the entity. And the process is called as refunding of the government grant. And when we record the refund of the government grant, only if the conditions attaching to the grant are unable to fulfill and grant demanded back by the government. For example, if the conditions attached to the grant are unable to fulfill by the entity and the grant not yet demanded back by the government, then no entry required for refund of government grant. And refund of government grant is required to be recorded only when it is demanded back by the government. And simply, the accounting treatment relating to the refund of government grant is very simple. So, what is the treatment you made at the time of receiving the government grant should be reversed. For example, if the grant received in cash for purchase of fixed asset, if you reduce it from cost of the asset, then now it is added to the cost of the asset. If it is treated as a deferred income, then so what is the entry we recorded? Deferred income account, bank account debited to deferred income. And at the time of refund, deferred income account debited to bank. Simply we reverse the entry. Then one by one we'll discuss. For example, if the grant received for towards the payment of expenses, so then so when the amount received, we wrote the entry bank account debited to deferred income. And so at the time of refund, we write the entry deferred income account debited to bank. But from the deferred income, some amount was already transferred to P&L. For example, 10 crore is grant received. Out of that deferred income is having the balance of 6 crore only, but the government demanded back 8 crore. And the remaining 2 crore we have to take it from profit and loss account. So we write the entry deferred income account debited 6 deferred income account debited 6 crore, profit and loss account debited 2 crore, to bank 8 crore. To bank 8 crore. Okay. So, and here when the in case of revenue grant, if it is treated as a part of the other income, then it is debited to the profit and loss account here at the time of refund. If it is deducted from expense, then added to the corresponding expense here. Then coming to the grant received towards purchase of a fixed asset and depreciable asset. Two methods we discussed it there. One is reduce it from cost of the asset. Then we write the entry bank account debited to asset. Now, at the time of refund, added back to the book value of the asset. On the date of refund, calculate what is the book value, add back the amount refunded. So we write the entry. So asset account debited to asset account debited to bank. And coming to the method two, when the grant received, we treat it as deferred income. So we write the entry bank account debited to deferred income account. But when the grant refunded, we have to write the entry what deferred income account debited to bank. But if the deferred income is not having the sufficient balance, the remaining balance we take it from profit and loss. We write the entry deferred income account debited to profit and loss. So deferred income account debited, profit and loss account debited to bank. And when the grant received for portion of the capital, nothing but capital reserve, treated as capital reserve. If it is refunded, capital reserve account debited to bank account. These are the entries we recorded in case of refund. And one more point is this is the one. The grant received towards a specific purpose, it should be utilized for that purpose only. Instead of that, it is neither be used for distribution of dividend nor we use it for adjustment against the losses of current year. And refund of the government grant is treated as an extraordinary item as per AS-5 and is required to be disclosed separately in the financial statement as a separate line item. Okay. So here some questions we have. Hmm. Coming to the seventh question. Jet Limited purchased fixed assets 50 lakhs, which has estimated life of 5 years, with the salvage value of 5 lakhs. On purchase of asset, government granted it a grant for 10 lakh. The amount was reduced from cost of the fixed asset, and the government was considered as a refund in the end of second year to the extent of 7 lakh. The first, on the day calculate the book value. On the day calculate the book value. So say what is the value of the asset there? 50 lakhs and grant received here is 10 lakhs, remaining is the 40 lakhs. And so what is the depreciation? 40 lakhs minus 5 lakhs, 35 lakhs by 5 per year, 7 lakh, nothing but 14 lakhs depreciation we have to provide. So the remaining is 26 lakhs. 26 lakh. Now we refunding it. At the time of receiving the grant, we reduced it from cost of the asset. At the time of refunding it, we have to add it to the cost of the asset. How much upon refunded? 7 lakhs. And we write the entry asset account debited to bank account. Asset account debited to bank. Next. Coming to the next one. A fixed asset purchased for 20 lakh, grant received towards it 8 lakh. Residual value 4 lakhs and useful life is 4 years. Assume depreciation on straight line basis. Asset is shown in the balance sheet net of grant. Net of grant means so gross value minus grant received. After 1 year, grant becomes refundable to the extent of 5 lakh due to the non-compliance with condition. Journal entry. So first when the asset purchase, asset account debited to bank. When the grant received, bank account debited to asset account. The net amount is so 12 lakh is there. The 12 lakh is a portion over the life of the asset. What is the scrap value there? 4 lakh. 12 minus 4, 8, 8 by 4. So 2 lakh per annum. And after 1 year, we need to provide the depreciation for 1 year. 10 lakh is there. Now the grant has been refunded. After 1 year, it is refunded. We write the entry asset account debited to bank. How much amount is refunded? 5 lakh. So 5 lakh is added. What is the revised book value of the asset? 15 lakh. This 15 lakh is a portion over the remaining useful life. What is the remaining useful life? 3 lakh, 3 years are there. After 4 years, out of the 4 years, 1 year is over. The remaining 3 years are there. So what is the scrap value? 4 lakh. So 15 lakh minus 4 lakh by 3. 15 lakh minus 4 lakh by 3. What is the amount of depreciation there? 3.67. 3.67. So depreciation to asset, profit and loss account debited to depreciate. This is the entry for refunding of government grant. On 1st April 2001, ABC Limited received government grant of 300 lakhs for acquisition of machinery costing 1500 lakhs. And grant was credited to cost of the asset, means reduce it from cost of the asset. The life of the machine is 5 years and the machinery depreciated 20% on WDV basis. Company had to refund the grant in May 2020 2000 X1 due to non-fulfillment of condition. Actually, grant received on 1st April X1 means X1 to X2, X2 to X3, X3 to X4. In the fourth year, that grant have been refunded. Then at the end of the third year, what is the book value? We have to calculate. What is the net amount? Total 1500 lakh is there. 1500 cost of the asset minus grant 300. Then what is the book value? 1200 lakhs. And what is the life of the asset? 5 years. Life of the asset is 5. And sorry, depreciation is 20%. So depreciation for the first year 240. How much amount? 960. And depreciation for the second year at 20%. So 192. 1 minute. 192. So 960 minus 192. 768. So minus depreciation 768 into 20%, 153.6. What is the book value? 614.40. This is the book value. Now grant has been refunded. How much grant has been refunded? 300. Nothing was stated, total amount. Then what is the revised book value? 914.40. 914.40. Okay. Entire amount of grant has been refunded. Next. 11th problem. 11th problem is over, I think, completed. Hmm. Same scenario. Sorry. 11th problem. Co-X runs a charitable hospital. It incurs a salary of doctors, staff, etc. to the extent of 30 lakh per annum. As a support, the local government grant a lump sum payment of 90 lakh to meet salary expense for a period of next 5 years. Means per year 90 by 5, 18 lakh. And A at the start of the year 4, COEX is unable to meet the conditions attached to the grant and is required to refund the entire grant of 90 lakhs. Required to refund the entire grant of rupees 90 lakhs and pass the journal entries. Journal entries in the books for refund only. So for refund only. When the grant received, it is meant for meeting the expenses over 5 years. So when the grant received, we treat it as deferred income. So bank account debited to deferred income 90 lakh. And how many years we adjusted that one? At the start of the year 4 means 3 years over. 3 years means 18 lakh into 3. 54 lakhs was utilized. In deferred income, we have the balance of what? 26 lakh only. 26 lakh. How much amount required to be refunded? 90 lakhs. So we write the deferred income account debited 26 lakh. The remaining amount 54 lakh we take it from profit and loss. So deferred income account debited, profit and loss account debited to bank. Sorry, 90 lakhs. So 36 lakh 54 minus 54 total 90 lakh will be refunded. Okay. And here 12th one. Grant received 2,500 lakh during the accounting year from the government for welfare activities to be carried on by the company to its employees and the grant prescribed condition for its utilization. However, during the year X2 to X3, it was found that conditions of the grant were not complied with and grant had to be refunded to the government in the full. Elucidate current accounting treatment with reference to the provisions of AS-12. So, if the company unable to fulfill the conditions attached to the grant, it has to be refunded. It has to be refunded. And the grant refunded is treated as a extraordinary item as per AS1. AS1. And when the grant received, if you adjust it to the corresponding employee welfare expenses or staff welfare expenses, then add it to the corresponding expense now at the time of refund. Or if it is treated as a credited to profit and loss account as another income, now it is debited to profit and loss. Now it is debited to profit and loss, depending upon the original treatment we have done. So amount refundable in respect of the government grant relating to revenue is applied first against unamortized deferred credit remaining in respect of the grant. To the extent that amount refundable exceeds any such deferred credit or where no deferred credit exists, amount we is immediately take it from profit and loss. What is the entry? Deferred income account debited, profit and loss account debited. So to bank account. Deferred income, profit and loss to bank. In the present case, amount of refund of the government grant should be first adjusted against amortized deferred income and remaining will be debited to profit and loss account and the entire amount is treated as extraordinary item as per AS5. And this is also relating to the asset only. Let me just do it. Next. And here on 1st April 2001, Eleanor Limited purchased a machinery manufacturing plant for 60 lakh, which has estimated life of 10 years with salvage value 10 lakh. On purchase of the plant, grant received 20 lakh. You are required to calculate amount of depreciation as per AS-12 for the financial year 22 to 23. And for the second year, 22 to 23. So grant received debited to plant. Debited to plant. So first of all, what is the grant received? Total value of the asset is 60 lakh. Grant received is 20 lakhs. And the remaining value is 40 lakh. So depreciation 40 lakhs minus salvage value is 10 lakh by 10 years. Nothing but what? 3 lakh. Depreciation is 3 lakh per annum because here we are following what? Right line method. 3 lakh grant. The grant treated as a deferred income. Grant treated as a deferred income, then entire asset we have, entire cost of the asset we have. So 50 lakhs, 60 lakhs minus 10, 50 by 10, 5 lakh. 5 lakh is the depreciation. And third one, the grant amount is deducted from the value of the plan, but at the end of the year 22-23, grant refunded to the extent 4 lakh due to non-compliance of certain condition. So when the grant is refunded, okay, when the grant is refunded, what is the treatment? For example, first 60 lakh, 10 lakh is reduced from the grant, total 50 lakh. And per year depreciation is how much? 50 lakhs minus what is the residual value? 10 lakh means 40 lakh. 40 lakh by 10 years, 4 lakh. 4 lakh means 4 lakh first year. So 46 lakh is there. Now the grant has been refunded. How much amount refunded? 4 lakh. If the 4 lakh is added, what is the revised book value? 50 lakh. What is the revised book value? 50 lakh. Now we provide the depreciation. Now we calculate what? Depreciation. So for the second year, assume that depreciation for the year has been charged on book value of the plant before making the adjustment for the grant. Alternatively, it is considered otherwise than depreciation will be charged after making the adjustment. Here, what is the depreciation first of all? 50 minus 10. So nothing but 40 lakhs. 40 lakhs by remaining useful life is 9 years. Already 1 year is over. Only 1 year is over. So 40 lakhs by 9. So here is nothing but what? 40. Hai. So what is the depreciation we have? 3 lakh 44,444. Okay. And another one, if the depreciation, the grant is received towards the promoter's contribution, it is treated as what? Capital reserve. And we write the entry bank account debited to capital reserve. And the 15th one, Courage Limited provides you the following. It received grant at 40% towards acquisition of machinery worth 25 lakh. And it may be reduced it from cost of the asset or it may be shown as a deferred income. Reduce it or shown as a deferred income. If it received capital subsidy 150 lakh from the government for setting up of a plant costing 300 lakh in notified backward area, then we have to treat it as a capital reserve. And it received 50 lakh from the government for setting up a project for supply of arsenic free water in a notified area, nothing but backward area. It is also treated as a capital reserve. It received 5 lakh from the local authority for providing corona vaccine free of charge to the employees and their families. So we have to reduce it from the staff welfare expenses, right? Or credited to profit and loss account as a other income. It also received performance award 500 lakh from the government with a condition of major renovation in the power plant within 3 years. And Suez Limited incurred 90% of the amount towards the capital expenditure, and the balance amount is the revenue expenditure. But remember, when the grant received for a specific purpose, it should be utilized only for the corresponding purpose only. So when the grant received, so deduct from the renovation cost or treated it as a deferred income based on the expenditure. But if the conditions are unable to fulfill, that entire amount should be refunded. Okay. 16th question. Medieval Hospitals, a reputed healthcare company operating a chain of multi-specialty hospital across India, had acquired 40 units of Doppler scan machine for Oliver Inc. US at cost of 1,65,100 per unit dollar. And at the beginning of the year 2022 to 23, prevailing exchange rate on the day 50 rupee per dollar. And what is the cost we have to consider? 1,65,000. 1,65,100 into 40 units, each exchange rate $1 is equal to 50. So total this is the one. And second one, the acquisition was partly financed through government grant of 5 crore and which was sanctioned specifically for purchase of these machines under healthcare modernization scheme, and grant was sanctioned with specific condition. In the event of change in management or ownership of the control, grant must be refunded to the government. In the April, 50% of the company's shareholding was acquired by overseas investor, therefore resulting in change in management control. Consequently, company became liable to refund the entire grant. Expected life is 5 years. Company follow the straight line method for charging the depreciation 20% per annum. Additionally, Medwell Hospital incurred following directly attributable expenses. So, freight charges. So, we have to add what the freight charges if and freight charges is how much? 4,000, 7,500. How much amount? 7,500 per unit. 7,500 per unit. And you further informed that company has not maintained any capital reserve or deferred income in respect of government grant received. First of all, what is the cost? 3,302 we have. Next, bank charges. So 4,000 into. So how much? What is the exchange rate? 50 rupee per unit. So 4,000 into 50 and in lakhs, right? And next 7,500 into how many units we have? 40. And this is the cost. And out of that, grant received is reduced 500. The remaining amount 2,807 cost of the asset as per AS-12. And you are required to advise accounting treatment in the books of Medwell Hospitals Limited as a result return of government grant in the light of relevant provisions of accounting standard. So when what is the entry we have to write? So bank asset account debited to bank. So 2,807 simply. Our asset account debited to bank 3,307. Bank account debited to asset grant received 500. And after that we charge the depreciation. Depreciation will be charged over 3 years. Depreciation will be charged over how many years? 3 years. So, what is the rate of depreciation? 20% on straight line method, right? What is the total amount? 2,807 is the cost. 2,807 into 20%. How many years we have to provide depreciation? 3 years. Then remaining book value. Here the grant refunded. When the grant received, we reduce it from cost. When the grant refunded, added 500. Then revised book value 1,623 lakhs. Okay. And so this was over. Okay, so these are the main points we have, main problems also relating to the government grant. So I hope you enjoy the session, and I will share this PDF in my Telegram channel, and the link is given below the in the description box. And please join, and there you can download it. And most important content only uploaded there. And always sometimes I may upload also MCQs also. You may practice it. Okay. And if you are new to my channel, please subscribe it and also share it to your friends. And if you like the video, please press the like button. Okay, thank you, take care, and we'll meet you with the next standard. Okay, thank you.